So this is a follow-up on yesterday's video on the euro and the yen. And I guess we'll look at the pound as well. So this market was clearly in an uptrend, and I believe that this was a sign of weakness here. Alright, and you had low volume rallies, so on and so forth, and the volume here is getting bigger and bigger. Right? So this pullback was a sign of weakness. That's how I interpreted it. That's how I interpreted it. Okay? What happened after that was I was taking a look for that upthrust, and this thing happened here. This thing right here is absorption. So that really screwed up the situation because they're absorbing at this level is to go higher. So that's kind of like new information at the time, and you have to be able to change your opinion. Still, I thought this was a sign of weakness, and this was absorption, and they're gonna break out and then bring it back down. But that wasn't the case. Instead, what happened was you had what I think was a climax right here. So sometimes this occurs where you have a climax after your sign of weakness or sign of strength. I know that that's against that diagram out there, but if you can think of a sign of weakness, a sign of strength before the climax as being preliminary demand, then why can't you have a climax after the sign of weakness or the sign of strength? So stuff like that. This is the thing. You don't want to follow a set of sequences. Instead, just what the market does, it plays with the behavior. You know, Sometimes you'll have a climax before the sign of strength or weakness, and sometimes you'll have a climax after it. Okay, and a lot of people will just call the climax after it. They'll call that, oh, it's a shakeout. Just using different terms, but really sometimes before, sometimes after. So this was it after. This was the test right here, the test up here, which was lower volume than the pullback volume. And then finally the damn thing broke over here, where you had your low volume. And finally, this right here is telling me that this was the climax. Otherwise, this may just be high volume and it's going to continue going higher. But this right here is saying finally they're exhausted. The movement has been exhausted, and this is a lack of demand, and it's finally going down. But, given all of that, this market is too strong. Along with that pound, like it might be pulling back, but these are very strong markets currently. And also, the other major lesson to learn is that all of this, is kind of iffy. Why is it so? Because they're just playing this range here, and that range is at support. So if you start shorting, you're not gonna get anything. You have a lot of confusion, and the reason is, on one time frame it can look bullish or bearish, but on another time frame, it's at support. So what happens is you can't have one time frame fighting the other time frame, especially if that other time frame is at support and it's a higher time frame. You can't do that. There's a sense of priority, or certain factors have a higher weight than other factors. The higher time frame being at support is a stronger factor than, in my book, The higher time frame being at a support or resistance level with trend, that factor is a very strong factor and can overcome factors at a lower time frame, meaning like heavy pullback volume, because heavy pullback volume or heavy volume on the pullback to a support level will induce buyers to come in at that support level. So it's like it's. I know it's surprising, but a lot of this judgment is more like critical thinking. Um, Anyway, without getting all funky, so that pullback, all it did was go to this support level. So these guys, they just like, they're just supporting it. So that's why my book, No Short, no short until I get a breakout, because clearly it's not, um, it's not gonna work, right? You see? So you must have the factors aligned. As soon as they are against each other, it's like one group of buyers is fighting another group of sellers, and you don't want that because then it creates all this type of um, problems. So this right here, let's just take a closer look. Mm. So this sign of weakness right here hit a support level. What was that support level? It's this. Okay. That sign of weakness, what I thought was a sign of weakness, and it may still be because we saw the reversal happen after the ensuing rally. You know, it it did this. So the question is, why didn't it work? And it didn't work because it went to a support level in a high time frame. And that's why I'm not inclined to short here either. Why? Because again, it's tagging the support level. So, you learn, and if you make a mistake, just add it in your process to check for that in advance. Okay? So, that's the lesson is, even though it looks bullish or bearish, watch the higher time frame trend with support and resistance levels, and very likely you want to just avoid a situation where things are not um, uh, things are opposing factors. Anyway, let's move on to the yen, which this was awesome. So I mentioned this yesterday as the sign of strength, low volume pullback in the spring, and this here was confirmation. Green, 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 green. Watch the video yesterday, you'll know it. It pulled back here, and right there on this thrust up, it just launched. Okay, so this was a really nice swing. Went up here, and here's the funny part. Like that support and resistance thing came in again. That rally basically was this move. Okay. Now, where was it stuffed? It was stuffed at a higher time frame resistance level. This is a resistance level. This is a breakdown. Right? So this is the resistance level right in there, and that's the breakdown. So it went down to a support level, and it rallied to a resistance level from that position. So this really just underscores how time frames must be coordinated, and really like the concept of time frame. Um, doesn't really do you justice to think, oh, that it's just a time frame. Instead, it's better to view it from a perspective that those are other traders looking to put in their orders at certain levels. Okay, so do you really want to fight them? Because that's what you're doing. You want them on your side, so they add the buying and selling pressure. It is an edge to have the higher time frame, quote unquote, higher time frame traders to be on your side because they take more risk and they take more reward. They have to. So they must have larger accounts. So by putting them in your favor, you're putting larger traders in your favor. Anyway, so it breaks here, goes to this level. This was this support level here, and that move basically right from around here, it just rallied to this area. All right, so that's what this move was about. Then from that resistance level, you had heavy selling. This looked like a low volume pullback, but it's a little confusing because it's like when they, here's the problem, when they go through support and resistance levels, all indications mean jack shit because you just have to know when to use it and not use it mechanically. So over here it looks like a low volume pullback, but when it did react, it's even on less volume. Like over here you have 34, you have 18. This is only 8. It dried up right here and rallied, and now it's like all within a range and cannot really be read. So I don't want to deal with trying to make sense of all this. This I like. So forget all this shit. But this I like. Why? Because very clear. Um, it's it's bigger than one, two, three, four, five, six highs. It's on good volume. It has low volume in the background, and it has a low volume pullback. So we have levels of support. Um, right there. It's a breakout right here. So I'm gonna watch one more pullback and see what happens. But this part I like, and this really underscores the need to, you know, use judgment with any indications. Indicators by themselves. I've said it again and again. If you don't believe me, look at this guy. His name is Ernie Chan. He's into all this data, algorithmic trading with machine learning and all that stuff. He has Ernie has an interview with Chat with Traders. He very bluntly says, he says, we created these systems, we tested them, back tested them, these mechanical systems. They got great results, but when we ran them, they all failed. Okay? When we back tested them, great results. When we ran them, they all failed. Okay? It's a very key point. So the solution does not lie in algorithmic or that type of trading. And this was the same thing like Wyckoff has said when he said, I don't know of any point and figure trader who followed a set of rules that made money. Meaning you cannot just follow a set of rules. This trading itself does not follow any set of rules. This is indicative because no two trends are exactly the same. No no two even swings. They're exactly the same. They're not. So this, the way it works is based on principles which are non-rule based, and being able to judge which you have two set of factors, A and B, and you have to be able to weigh them in your mind. So A is 30%, B is 70%, or one is 60% and the other is 30%. You have to be there. That's how it works. You weigh them, and then you go with the stronger opinion. Machines cannot do that. They are designed to function based on logic, and that means that they have to follow a rule or code or a line of statement. If then blah blah blah, do this. So they are unable to weigh things. A is 30%, B is 70%. They cannot weigh and judge. What they can do is say, if A is there, then do B. If A and B is there, then do C. And they cannot weigh factors. Um, they can only follow rules. That's that's the inherent flaw, and that's why no system, even if it's working, it's only going to work for a period of time, and then it's going to totally bust. And so, like, look up this episode, "Chat with Traders" with Ernie Chan, and you get a better idea of this. Anyway, take care. Bye.